TransUnion's latest data shows a decline in the South African Consumer Credit Index, or CCI. A fall in the index reflects deteriorating household cash flow as living costs rise. It's also an indication that the weak job market is taking its toll on income security. I don't know about you, but it is a rather scary picture indeed. So we've invited Geoff Miller, the CEO of TransUnion, into the studio to talk about these findings and basically spell out what it means for us. Good to have you, Geoff. Welcome to Morning Live.
Thanks for having me.
Is it a scary picture, or am I being a little bit dramatic?
I guess I would say that consumers are definitely under stress. They're under financial stress. The economy obviously hasn't been performing too well. Consumers have taken out a lot of unsecured debt, and now they're in a position where they're struggling to repay that debt, as well as be able to pay for the living expenses on a day-to-day basis.
Yeah. So let's just give a layman's definition of consumer credit health.
Yep.
What exactly is it?
So basically what we look at is the consumer's ability to pay their bills. So how many consumers or how many accounts are delinquent. We look at things like household cash flow, inflation, and aggregate all those together with just a single number that gives you an overall impression of consumer credit health. Right now, we're well below 50. We're at 43.4, which means there's a high level of stresses that the consumer is feeling.
Well, I mean, you talk about that number, and then I look at just 3 years ago, the credit looked rather promising at 64%, and we've now declined to 43%.
Yeah. So it's almost 3 years of declining performance or indicators of consumer credit health, and we're actually now quite close to the bottom levels that we saw in 2009, which was obviously a recession year. So it's not a good picture.
Yeah. How do we get out of a situation like this? It's not easy because people are not necessarily, like we say, the job market. People are looking for jobs. They're in debt. They can't pay this back. Where does this leave us?
Well, so I think from an economic perspective, we obviously need to get moving in the right direction. I think with the rand starting to perform a bit better, hopefully inflation will start to moderate. But there's a fair amount of consumers out there that have taken a lot of debt and they're struggling to repay it. So I think that's going to take a bit of time to work through the system. The good news is credit grantors have become much more stringent around additional credit that they've been granting. So, we think they're taking the right steps, but that doesn't help the consumers that are underwater at this stage.
Are we playing catch up to the rest of the world? Because we, at one stage we were sitting and watching the world going through that recession.
Yep.
And we almost felt that we were a little bit away from it and we weren't really going through it. But now you use the word recession. I mean, we had figures that we saw back in 2009. Yeah. Is the world recovering and we're catching up, or is this a global phenomenon?
Yeah, I think difficult to correlate necessarily this with GDP. So I think the South African economy is going to continue to grow. I think this is a reflection of the run-up in unsecured credit that's happened over the last couple of years, as well as basically a moderately performing economy. So we're certainly not going to enter into a situation that happened in the U.S. with the mortgage crisis. The banks are very well capitalized here, and that won't cause any problems. But I do think there are a significant or a fair amount of consumers that are under stress and will continue to be under stress for the foreseeable future.
Yeah. Well, I mean, today, interesting that we're having this conversation because we see that the Reserve Bank are actually they're sitting down, the Monetary Committee, deciding interest rates. Do they go up? Do they stay unchanged? Do they go down? What decisions can they make to make lives for South Africans easier, taking this study into account?
Yeah, I mean, the challenge is that the interest rates really impact those individuals that have mortgage bonds as well as vehicle asset finance. Unsecured lending rates are very, very high already. So if you're at a 26% interest rate and it goes to 25.5, your interest rate repayments are still quite high. So from that perspective, the Reserve Bank, it's very difficult for them to do anything about the current situation or those consumers that are underwater. I think they're obviously going to look at broader economic indicators to determine what's the best thing for the economy.
All right. Thank you for talking to us, Geoff. Is there somewhere that people can go and view the findings?
You can go onto our website, www.transunion.co.za, and you can download the report there.
Excellent. Thank you very much for joining us on the program. Geoff Miller is the CEO of TransUnion. Visit their website and you'll be able to view the entire CCI, just having a look at the South African Consumer Credit Index and see how South Africa is actually performing.